Good afternoon, students. Please confirm, am I audible? All right, so I think we should start now. All right, so what we were doing actually, we were doing prospectus, and there were a few questions I did ask that whether documents what are involved in our transaction, whether it can be considered as a prospectus or not, right? Whether it can be considered as prospectus or not. And we went into the discussion of definition, and in the definition there were certain sentences written, and one of the word what we went through was, what do you mean by the term called public invitation and the private offer? And we try to learn that number doesn't matter while deciding the concept of public and private offer. Do you agree with me? Hello? Number doesn't matter. Even if there is one person, it can be public offer. If there are a lot of thousands of people, it can be private offer. Depends upon what are the restrictions. If it can be accepted by anyone, then who are invited doesn't matter. So who can accept it? That is the determinant factor about the public offer. But Supreme Court of India restricted this definition to certain number for company purposes. So now, according to the company purpose, if in a one financial year, if you are inviting 199, more than 199 people, that is 200 or more persons in one financial year, then automatically that becomes, you tell me, automatically that becomes what, students? Automatically that becomes public offer, and accordingly it would be considered as public invitation. Before I start discussion, all of you are clear with this much? Come on. Hmm? Just a second. Interlaw. No, I think I made a mistake. Just a second. Where did I put that? See interlaw. All right. Please you confirm that can you see this Excel file or not, and then we will continue with that. Please confirm, is it visible to all of you? All right. Okay, so on the basis of that, we are going to go with another question. So this is the question number 5. Question number 5. All right. The question number 5 goes in this way, that from the below given data, explain whether the offer is public or private. Okay, so identify the offer. Identify the offer. All right. Suppose there is a company and Miss Monica, she is inviting certain people for subscription to the shares of the company. To the shares of the company. She's inviting the people for subscription of the shares. Now, details are going on this way. 100 people are relatives and friends. and friends, and 600 people are employees to whom the shares had been offered or invited as ESOP. I think all of you know what is ESOP, right? Employees stock option. सबने सुना होगा इसके बारे में, ESOP के बारे में? So 600 employees are by the way of ESOP, employees stock option. Got it? So is it the violation of section 42 subsection 2? Explain with your logic. What do you think about it? Is it a violation or not? Is it a violation or not? Come on. Okay, Monica says yes. What about others? Is it a violation or not? No employees not included. Oh, is it so? All right. So understand, I can see Neha and Monica and a lot of students are saying yes, it is the violation because okay. So according to you, it is a public offer or private offer? What do you think about it? It is a public offer or private offer. Let me use the word relatives and the friends only. This only word is very important. Only means no one else other than these people can accept it. And ESOP only. So according to the definition what I given under section 42 subsection 4, this offer is considered as what? Is it a public or private? So understand, if you look at this is the offer to more than 199 people or not. You can check it over here that there are 700 people who are invited to this particular invitation. So according to the law, if you look at this, it is of course, if it is what? It is violation, and this should be treated as public offer, but actually it is not. Why? Because this section 42 subsection 2 has certain exceptions to learn about. Certain exceptions. Law says while counting this 199 numbers, these two will not be included. So these two will be excluded while counting 199 number. The first is QIB. What do you mean by the term called QIB? Write down, it means the qualified institutional buyers. And second is employees to whom the shares are offered under ESOP. So these two are considered as exceptions. So you can check it. Only 100 people are invited privately. 600 people will not be considered because they are part of the exceptions, and that is why the total number will be only 100, which is not the violation of 199, and hence in this example or in this question it's not a violation. Are you clear with this? Hello? Come on, are you clear with this? All right. So guys, write down the note for that. Write down the note for that. However, while calculating this 200, this 2 will not be included there. Excuse me, just a second. Is it clear to all of you? I'm sorry for the inconvenience, as I'm taking the class from the house, so certain disturbance should be there. I'm extremely sorry for that. All right, copy that and type the word done once it's done. Copy this. Done. Very good. All right. Do you need any question for the financial year? Okay, let me tell this question. Put here the question number 5. Question number 5, and these questions are on the public offer. All right. Question number 5. Suppose there's a company and the company's name over here is Neha Limited. All right. Neha Limited. Now, in the year of 2019, 2020, it offered to 190 persons. 190 persons privately. And in the year of 2021, it is one more 195 persons. So altogether, if you see 195 plus 190, that comes to 385 people. My question is it a violation or not? What do you think about it? Total invitations made during since last 2 years, it was 385 persons. So is it a violation or not? So what will be answer? Understand, it is not violation. The simple reason is it is not in one financial year. Are you getting me? So this is valid. All right. So all of you have understood now the concept of what I can say, the public offer. All right. Now come back to the definition what I just started yesterday. All right. So if you can just look at this, it is written that any notice, circular, advertisement, or other document where you have gone for the public invitation. So any document issued in which you have made a public invitation for the subscription of the shares, then it will be considered as the prospectus. If you look at these two particular explanations as given here, about 3 questions you can definitely make clear. Okay, let's consider now 3 questions one by one. Question number 1, templates. Can I say template comes under document? Hello? Can I say pamphlets come under documents? Hello? Obviously, yes. So these documents, what were the contents? Contents were written like say company's document, you are invited to subscribe the shares. Pamphlets were distributed randomly. So was there any specification that only particular persons should subscribe the shares, or it was applicable for everyone? You answer the question. Was it applicable for only particular person or it was for everyone? So answer to this question is it was for everyone. So now come back to the definition and apply those two. So it is other document and public invitation for the subscription of the security. So guys, question number 1, these pamphlets are prospectus. Write down over here. These pamphlets are prospectus. According to section 2, subsection 70, the definition of prospectus. So many students are maybe taking lightly that what's the use of having this. Understand sometimes one simple definition and matter goes to the Supreme Court and we need to interpret that. So interpretation must be clear. That thing I'm repeating again and again since your CA foundation. Did you observe, I always tell the students that please emphasize a lot on the interpretation. If interpretation is wrong, you can mess up with the entire thing. Got it? What about this newspaper? In the newspaper, what was the thing? In the newspaper, you advertised that there are some shares yet to be allotted. Interested parties can apply to the company. So it was an invitation? Yes, but was it private or public invitation? Answer the question. I'm glad now you can confidently answer this question. So obviously, yes. Here, it was available for everyone. And if you again apply the section 2 subsection 70 over here, it is advertisement for the public invitation to subscribe the security. Then automatically this newspaper advertisement becomes, come on, becomes prospectus. So write down over here, newspaper advertisement is prospectus here. It is prospectus here. Question number 3, be very careful and then you answer. I think there was Vishwa, right? All right, tell me. So letters in envelope contains the invitations to the subscribe the shares as confidential. It was on the envelope. What about this now? Tell me, private or now let's say the total number of people. I'm not talking about the employees. There were people, persons actually, and it was only to, let's say, 120 persons. 120 persons is that fact I did not tell yesterday, but so you have to identify only one thing, that is it private offer or it is public offer. That's all. If you could answer this, then the things becomes easy for. So understand guys, it is a letters in envelope and it was written the confidential. Here, in this case, this word confidential plays the important role of understanding. You tell me, when you write the word confidential, is it mean for everyone or it is only for the specific people? Answer the question. It is for everyone. That means everyone can accept it, or it is available only for some selected people, only for specific people. So answer is here, it is for the specific one. And that is why here, this invitation is totally private. And if it is private, it is not prospectus. Then it is not prospectus. Hey, type the word clear if you got till this. Hello. Please, you keep on reminding me how many questions we are doing, okay? Because each and every case, I want to give you the unique question number. All right, unique question number. All right. So guys, by doing this, we have solved powerful 5 questions about prospectus. Hope you enjoyed this. Are you ready for the 5 or 6 questions? How many questions we have done so far? Oh, I'm sorry, 6 questions we have done. This was the 5th one, and yes, this is the 6th one. My mistake. Keep on reminding me. Okay, are you ready for the question number 7? Question number 7. Let's go with that. Question number 7. What numbers of the questions will actually make you to track the questions and the topics? That will be easy for you to revise, I guess. Right? Moment when you open the chapter and when you find the total, let's say 70 or 80 questions are there, you need to refer them only. And trust me, the most of the questions in exam would be out of them only. All right. So here it is question 7. So let's take, there is a company called Apple Inc. I think all of you heard about it. Have you heard about this? Apple Inc. All right. So this company, Apple, here, let me put it here like this. Holy Baba, that is too huge. Very famous, isn't it? This company wants to do business in India. This company wants to do business in India. And in order to start business, it wants to get the investment from India, from India. And that's why it issued the advertisement to Public of India, seeking subscription, seeking subscriptions from Public of India. My question is whether this advertisement is considered as prospectus or not. Now, the important part I want to point you out is Apple Inc. is not Indian company. It is foreign company. Do you agree with that? Hello? It is foreign company. Indirectly, my intention behind this question is whether prospectus chapter applies to other than Indian organizations or not. That is my question. Does it apply to Apple Inc.? So Apple Inc. requires to follow prospectus chapter or not? That is my single question. Answer. Does it need to follow the provisions of prospectus or not? Why? It is not Indian company, and prospectus, it is as per the Companies Act 2013. Companies Act 2013 applies to what? Only not Indian companies. So on what basis you people are saying that Apple Inc. must have to follow this? Okay, first of all, you answer one question. Apple Inc. is it a company as per the Companies Act? अरे बाप रे, फाउंडेशन का सब भूल गए आप लोग. According to section 2, subsection 20, what do you mean by the term called company? The term company means which is registered in Companies Act 2013 or which is registered in any of the previous company law. Apple Inc. Is it registered in Indian Companies Act? Answer is no. It is registered under all right. So it is as per the US Companies Act, right? So it is not a company as per the Companies Act 2013. Do you agree with this? Hello? It is not a company as per the Companies Act 2013. And now that question becomes so beautiful. Now you tell me, if it wants to get the investments from Indian public, whether chapter of prospectus applies on this company or not. Does it apply to this company or not? Okay, so again, some students are saying yes, but you know what I'm interested in? I want to know the logic. Why? Why? I want to know that logic. आखिर ऐसा क्यों? Let me check who can crack that logic. If this question is there in your CA Inter exam, how would you have responded? I want to know that. बताओ कैसे होगा ये? Okay, it is within Indian territory. So Indian law applies. No, who said? Indian law applies, but Companies Act doesn't apply, na Jayesh? To understand, Companies Act applicable to only to Indian companies. I'm sorry, your logic is not correct. Let me tell you what is the logic. Again, guys, the logic lies under section 2, subsection 7b. I have always complained to this youth. Did you observe one thing? This youth is so impatient today that they do not want to watch any video having length of more than 2 minutes. That's why TikTok like application is very much popular today in across the globe. 60 seconds and they are satisfied. Let's scroll it. They are so impatient that they are not ready to watch very interesting long lectures which are available. That's what, and that is resulted in less concentration, which resulted into very weak observation. Guys, if you look at section 2 subsection 70 over here, what is the definition of prospectus? What is written? Read it very carefully. Prospectus as per section 2 subsection 70 means any document described or issued as prospectus, includes red herring and shelf that I will take later on, any notice, circular, advertisement or other document inviting offers from the public for the subscription or purchase of any securities of a body corporate. Are you getting this point? That is the catch in the definition. So any document which is issued by any body corporate as a public invitation to get the shares subscribed, to get the securities subscribed, then the document becomes prospectus. So the term company is not written. Did you observe it? Company term is not mentioned here. Term body corporate is written. And I do not know whether you are aware about that concept. What did I taught in CA Foundation? Body corporate concept is wider than company. Do you know that? Do you know that the term body corporate is wider than company? All the companies are body corporates, but all body corporates are not company. Hence, yes, that's true, man. That's true. Just a second. All right. So foreign company, it's not a company within the meaning of section 2, subsection 20, but can I say it is a body corporate? All the foreign companies, foreign organizations, foreign trusts, can I consider them as body corporates? Hmm? So if any body corporate, so obviously here the Apple is not a company. Write down here certain observations. Here Apple Inc. is not a company within the meaning of section 2 subsection 20, but it is a foreign company under section 2 subsection 42. Hence, it is a body corporate. Body corporate. And that is why, guys, this advertisement becomes prospectus. Are you getting me? Write down this document, this advertisement is prospectus. This advertisement is prospectus. I hope, guys, the question number 7 is clear to all of you. Hello? Okay, are you ready to face the question number 8? Okay, question number 8. Let's go with that. So, what is question number 8? Let's have a look into that. Let's say here Mahima Limited, it is a company, and this company issued advertisement. Read very carefully, okay? Advertisement inviting public to get subscribed the debentures. This word is very important. Debentures worth of rupees worth of rupees 100 crores. My question is it prospectus or not? This advertisement is a prospectus or not? Again, I'm not getting some good confident answer. Okay, Shruti says no, Mahima says no, very good. Uh, Sugumvanam, he says yes. What about other students? Okay, let me tell you about this. Again, guys, the answer to this question lies in section 2, subsection 70. If you read the question carefully, you can get to know about it. Okay, Shruti K suddenly changed her answer. Neha says yes. Okay. Why you people are replying privately? Oh my god, everyone is replying privately. Publicly, you're not allowed to. Can't you answer publicly? Look, Suguvanam can do that. Huh. If you look at the question number 8, again, if you go back to section 2, subsection 70, what is written? Inviting offers from the public for the subscription or purchase of any securities. The term securities written. Did you observe? The term securities written. Shares are not written. The term shares is not written. What is written? Securities. And debentures can be considered as securities? Debentures can be considered as securities? Obviously, yes. So what am I trying to say? Understand whether you are issuing the shares or debentures, both are. Shares or debentures, both are considered as what? Securities. That is securities. And hence, obviously, yes, this advertisement is prospectus. All right. Question number 9, I want to put it over here. The same fact, but a little bit changing the thing is. In the question number 9, the same facts a little bit change. Let me tell you, the same company, Mahima Limited, all the facts are same except one. Instead of debentures, what if you went for deposits? That is only the change. Now, this advertisement is a prospectus or not? Answer the question. Is it a prospectus? Is it a prospectus? Write down, guys. No, it is not a prospectus. The reason is, as deposit is a short-term loan and not a security. Got it? All right. So that is the end of the definition of prospectus. Hope you have enjoyed. Hope you have wrote it. Got it? If you want to write it, all the logics and all that, I'm giving you 2 minutes for that. Copy and type the book done. I hope it is done. All right. So now we are going to touch the another point of the section 2 subsection 70. Let's come to this part now. Section 2 subsection 70, it is written red herring prospectus or shelf prospectus. So my next question is goes in this way. Let's understand the question, and that is the question number 10 now. Okay, what is the question number 10? Let's understand this. Suppose there is a company's name is Shruti Limited. All right, Shruti Limited, and this company wants to issue following securities in upcoming 3 years. 3 years. All right. Write down point number 1. Equity shares of rupees 50 crores. Preference shares of rupees 30 crores. Debentures of rupees 20 crores. Again, equity shares, because I'm talking about 3 years now. So multiple issues are involved here of rupees 80 crores. Okay, explain. Can company issue shelf prospectus? Note down the question. Note down the question first of all. Before I start the solution, you tell me, am I properly audible to all of you? क्या मेरी आवाज सही तरीके से सबको समझ रही है? All right. Note down the question. Note down the question. Go on. Copy this and type the word done. All right. So only that student can answer this question who has the knowledge of section 31. Section 31 of the Companies Act 2013. Why? Because section 31 talks about shelf prospectus. Section 31 talks about shelf prospectus. Got it? If you do not have idea about section 31, then I'm sorry, you forget about this. You cannot solve this explanation. Now, what do you mean by here the term called shelf prospectus? Let's take an example first of all. Suppose, is it possible to issue multiple securities, multiple issues within a year or within 2 years or within 3 years? Or it is like once the company has issued the shares, then it is banned, it is restricted to issue further shares for upcoming 10 years, 5 years. Is there any ban like this? Or it can be allowed to issue the way it wants? What do you think about it? It is allowed. It is very much allowed. So suppose there is a company This is the first issue of equity shares of 100 crores. After just 3 months, company again thought, I want more 100 crores. It went for second issue of another 100 crores. After 2 months, again company want to go for another issue of 50 crores. Third issue. After 2 months, again company want to go for another 100 crores. This is the fourth issue. All right, so you try to understand this. So this kind of situation is allowed in the law or not, that right now you issued for 100 crores, again just after 3 months you went for another 100 crores. This kind of situation is allowed in law or not? What do you think about it? Huh? It is actually the same question what I just did there. Yes, it is allowed. ऐसा करना possible है. This is possible in the eyes of law. There is nothing wrong. But let me find out the smart student in this classroom. If you're going by this, there is one big problem. What is that problem? Identify that problem here. Authorized capital? No, assume it is within authorized capital, and if it is beyond authorized capital, alteration of memorandum option is always there. Hmm? Order of issue should not be changed. Not exactly. Let me tell you what's the problem. Sonia and Mahima, you both are perfectly right. Understand here, if you're going for this 4 times issue, you have to issue prospectus 1. This is prospectus 2. This is prospectus 3. And here it is prospectus 4. And according to the law, if there is a prospectus, every time, it must have to be submitted. It must have to be submitted to ROC. Every time you have to prepare, you have to submit to ROC. Until and unless ROC approves it, you cannot issue this. Now let me tell you the real problem about prospectus. Before I go, do you people want to see the real prospectus in PDF? How prospectus looks like and how many pages are there, etc. Let me tell you. Mm, I'm just trying to find it. Just a second. Hold on. Why it's not coming? It is loading, students. Just a second. Let me see. Is it the same or different? Oh yes, it is. I got it now. Why this is called prospectus? I don't know whether you have seen this or not. And this prospectus, can you see this document? Just confirm that. All right, then. This prospectus belonged to Tata Motors Limited, 30th March 2015. It is also known as the letter of offer. And look, a lot of details are there. Promoters and global coordinators, like these all are the banks where you can just have this. This is the index. All right. So look at all this. I have downloaded this from the SEBI website itself. Okay. This is the prospectus chapter. So really we should understand कि कैसे होगा. Look, a lot of presentation of the information is there. Exchange rate, then certain statements. But I want to draw your attention towards this total number of pages. Type how many there? How many there? 515 pages are there. So there's nothing colorful. Now the question is, who is going to read all these details? The students like you may be thinking, sir, we can't complete our CA inter books. Who's going to read this prospectus? So, do we really have time to read all these financial matters and each and every line and Hmm? Oh, Mahima has the time, really? Sure. Okay, look at this, all the data and the details and a lot of comparisons, a lot of reports, a lot of things are prepared here. By the way, my point is, if I say here, now come to this part. If I go for the first issue, I have to prepare that 500 to 600 pages. If I go to second issue, again I have to prepare those 500 to 600 pages and I need to submit it to ROC. I have to register that with the ROC. If it is third, again I have to prepare the same things again. Fourth issue, again I have to go and I have to repeat the process again. Now my question is, if already I have submitted my prospectus to ROC within 3 months, do you really think that substantial changes would happen? Hmm? Do you really think that a lot of changes would happen? बहुत कुछ change हो गया होगा? Can we assume that? No. Hardly few financial data may have changed. Can I say the prospectus 1 versus prospectus 2, 98% details would be same as it is? Hello? Come on. 98% details will be same. Then why the details which are already given to ROC should be repeated again? Don't you think it is not matching with the logic and the sense? Why you should repeat the things again and again? For what already given? And that is why, my dear friend, the industry requested the government that please allow us to issue one prospectus for multiple issues. And government said, okay. So guys, now any prospectus which allows the company to go for multiple issues with multiple securities, that means every time prospectus issue is not required, not required. First issue would be applicable for all the subsequent issues, then such prospectus is known as, come on, shelf prospectus. Are you clear in this? This is known as shelf prospectus. So just one line to remember this entire concept is One prospectus for multiple issues for multiple securities. That is called the shelf prospectus. Are you clear in this? Hello?
Sir? Sir?
Okay, but this section 31 has certain conditions. You tell me, can I say prospectus is a public document? Look over here, the people like you and me can easily access any prospectus issued to SEBI. So it is a public document. Yes or no? Hello? Hmm? It is a public document. Just a second, guys. Wait. So prospectus is a public document. And public has the right to know about everything happening in the company. Do you agree with this? Public has the right to know about everything happening in the company before going for investment. Do you agree with me? Before going for the investment. So here, if the company people are going for the investment, public has the right to check what is happening. So here the biggest question, question number one over here is, sir, if one prospectus is available for multiple issues, that means once it's issued, for the second time, you don't need to issue it again. For third time, you don't need to issue it again. For fourth time, you don't need to issue it again. For fifth time, you don't require to issue it again. But what about the changes? Obviously, the changes will be very minor, but still changes are changes. How such changes will be communicated to the people? That is my question. All right. So how the changes, you answer the question, how the changes between two issues, two issues will be communicated to the people or public? No, wrong answer, Mehma. All right. So write down, guys, changes will be prepared in a document, and this document is known as information memorandum. So sometimes in your exam, if there's a question that what do you mean by information memorandum? I think now you people have the answer of this, isn't it? So information memorandum, it is a document which contains what? It is a document which contains the changes between two issues. Changes between two issues. Right, type the word clear if you got till this. Hello? Don't worry, I'm going to give you the notes for that. Okay? Another question. So doubt number two. All right, doubt number two. You tell me, what is the validity of shelf prospectus? Is it like, let's say, one issue is as on today and another issue is after 25 years? After 25 years, the lot of things is changed, and still I'm claiming that I want to take the shelter of shelf prospectus. I don't want to issue the prospectus again. So is it valid? Is it valid? Hello? Is it valid? Is it valid? Answer is no. So there should have certain validity, right? There must have certain validity. So what is the validity? So write down, guys, One shelf prospectus is maximum valid for how much time? Valid for how much time? Valid for how much time? Write down only and only 12 months. That is the 1 year from its issue. So after 1 year, if you're planning to go for new issue, then you have to follow the after if you want to go, you have to follow the fresh proceedings. Hey students, are you clear with that? Hello? Are you people clear with that? So write on the notes about this shelf prospectus, section 31. Just wait, I'm giving that. It is up to you if you want to write. It's fine if you want to just take the screenshot. That's also fine. Actually, there are a lot of things you need to write here if you want to. Instead of that, let me make it the two different notes for this. That would be great, I think, because it's too much. Yes. Copy this much first, and then I will go to the next point. Better you take the snapshot, guys, so that we can save the time, because writing will take a lot of time. That's why. Done the first one. This is the second note. You take the screenshot and just read it and go ahead. All right. Once it is completed, type the word done. Thank you. Sir, can you please do a recap of shelf prospectus, just the main headings? Yeah, sure. Understand that it is the prospectus which allows the company to go for the multiple securities. So one prospectus for multiple issues. So every time company doesn't require to submit the prospectus again and again to the ROC, to the SEBI. Now, what about the changes between the two issues? So changes between two issues will be uh, disclosed by issuing another document called information memorandum, which contains the changes regarding new charges created, financial position, or any other changes as prescribed by the law. That would be there. All right. And the maximum validity of such a shelf prospectus is 1 year. That's all. This much only you need to remember for your examination. Okay. All right. Now, next point I want to start is the red herring prospectus. Red herring prospectus. But before I started, I think we should take a small break of 5 minutes, or I should continue. It is up to you. No break. Very good. Oh, take it, take it, take it. All right, are we good to go now, students? Can we start? All right, thank you. So that was about the shelf prospectus. Now some students have this doubt. Sir, what about this last three paragraphs? They're asking me that, sir, that we could not understand. Last three paragraph. Look, last three paragraph, what I've written over here, that is in respect of the advances received. Advances received. Look, we've written that if any advance payment of the subscription is received and later on I made the changes and you don't like the changes, is it possible? You paid the money with the expectation that changes will not take place. But after then the changes what have taken place don't like by you. It's not liked by you. Possible or not? Hello? Possible or not? So what law says if any advance money is paid, then company should give the time of 15 days to withdraw their application. To withdraw their application if they do not like the changes. If they do not like the changes. Clear? So there is nothing you can just write it about that these three paragraphs, these two paragraphs particularly. It is about the changes, information memorandum. If some people who paid advance money and later on they do not like the changes, then they have right to withdraw. They have right to withdraw their subscriptions. That's all. All right. Okay, guys. Now the next concept what I want to put over here, it is the question number 11. So we have successfully solved 10 questions, and question 10 was very lengthy question, of course. Section 11 now question 11 we are going over now. It goes in this way that what do you mean by the concept called red herring prospectus? Red herring prospectus. What is herring prospectus and why it is issued? Why it is issued? Okay, in order to understand these, first of all, you have to understand the steps of share allotment. So first of all, there is a board meeting and company of course decides to go for the share allotment. All right. Excuse me, student, just a second. I'm coming within 2 minutes. Coming within 2 minutes. Just a second. Okay. So come back to this. So the first point is share allotment. What are the steps? So first of all, company decides that they want to go for the share capital or any security. After then, they prepare prospectus. They prepare prospectus. Second, they submit this prospectus to two authorities. The first is ROC and the second is SEBI. After getting approval of the same, they issue it to the public. They issue it to the public. After then, look, once it is issued to the public, minimum days for which it can be opened is for the 3 days, and maximum for which it can be there for the 30 days. So this is called the subscription is opened for the public for application. So you have to decide that this is open for what time, 3 days, 15 days. If a company is very much confident about getting the money, then they do not go generally beyond 3 days. So that is what is given here. After then, there is the selection of the application which deserves to get the shares of the company. After then, the shares are allotted. That's called the allotment process. And then allotment letter will be issued. And the last one is the share certificates will be issued. And then accounting entry in the account. So this is what is the normal process of the share application. Of course, somewhere underwriting and all that terms would come while allotting. That will come here. But my point is preparation of the prospectus is very important. Now, another question is what if, okay, one thing you know, right, that while you issue the prospectus, the company must have to get minimum how much subscription? Company must have to get certain amount of subscription. How much it is? And if company could not get that much amount of subscription, then company has to refund the amount back to the shareholders. So minimum how much percentages will be obtained? What are the percentages of minimum subscription? All right. So you people are explaining with the 90%. That is correct, but it has certain exceptions. I will tell you later on. So it is called 90% minimum subscription you have to obtain, right? What if the company could not obtain this 90% of subscriptions? Can I say then company needs to refund the amount? Hello? Can I say then company must have to refund the amount, return the amount? And that is what is the process here. Okay, अब सबसे बड़ा चीज है why company is not able to achieve 90% subscription? Reason क्या है? What is the reason that company is not able to achieve 90% subscription? Simple reason is people doesn't like, people don't like the price you determined, price company determined. For example, the actual price of the company is 150, but company goes for 250. Can I say it is overpriced? No, no, it's not like that. Every share capital, every share has the price in the market. And all those people who are trading in the share market, they by anyhow want to buy the shares if they have the funds. But one of the major factors why this issue fails is They are not in the position to predict that what is actual amount of the company. If actual value of the share comes to 150, but company keeps 250 rupees, then some people may not apply to the company. And this is how it fails to achieve minimum 90%. Do you agree with this? One of the reasons why company doesn't achieve whole 100%, the reason is it is overpriced. But what if before issuing the shares, you have perfectly the knowledge about the price, at what price exactly the people are going to apply to your shares? If you have the perfect knowledge of that, then are there any possibility of failure of subscription? Answer the question. If you people have perfect knowledge that this is what is the demand of people, if you have the complete information that at 180, 190, 200, whatever price, people will definitely subscribe the shares at 100% ratio. Is there any probability for failure? Answer the question. Answer the question. If you are accepting the money with the surety that you are going to get the 100% achievement, then there is no any chance of failure. So how will you get the 100% surety that you are going to get 100% share capital from the public? So many of you may be thinking that sir, it is about underwriting. All of you know about underwriting? I think it is done in your accounting if I'm not wrong. Hello? Underwriting तो सीखा ही होगा आपने? So I'm sorry to say, but it's not about underwriting. ये underwriting के बारे में बिल्कुल नहीं है. If you're thinking like that, it's not like that. It is not about underwriting. It is different than that. It is about the survey. You have to make one survey now. Now, please remember this survey. What kind of survey here? What kind of survey it is? Survey is not like you have to go door to door, ting tong, at what price you would like to buy my shares. It is not like this. Let me tell you. Okay, you tell me when the subscription list is starting. Batao. When the subscription list is starting, the moment when you issue the prospectus, your subscription is opening for the public so that they can invest in your company. Do you agree with this? The time when you issue the prospectus, that is the time when people should start investing. But what if before issuing the prospectus, you convince the people and you are successful to get to know about the price at which the people will give you the 100% success in what you should do? So understand. The best solution for this problem is instead of issuing final prospectus, issue rough prospectus. Rough prospectus. Now, what do you mean by rough? Rough is equal to which is not final, which is known as just a draft. Do you agree with me? Don't issue the final prospectus yet. Just issue the rough prospectus. Rough means still there are chances to get certain updations. And what you should not put in that, right down over here, price will not be put inside. Price will not be mentioned. But instead of that, price band will be mentioned. What kind of price band? Minimum price company wants to charge and maximum price. For example, you can keep it like 200 to 300 according to your assumptions. And let the people decide that at what price they want to buy the shares. So actually what happens even if you look at, let me check whether it is available or not, but just a second. I showed you right now the Tata's prospectus. Did you see that? Oh, wait. Yes. This is the another prospectus what I want to put here. And if you can just check it, it is a list of the lot of prospectus here. Can you check it? Kritan Infra, Timber, BMS, Galaxy, Sundry Foregoing, PTC, Tata Steel, FPO, and are you able to see this? Let's check it whether it is there or not. Wait. Just a second. So here, if you look at this, it is Tata Steel. Tata Steel. All right. And look at what is written. Further public issue of rupees 57 crores equity shares of face value of rupees 10 each for cash at a price of rupees dot. Where is the price? Price is not mentioned. Are you able to see this particular dot here? Hello? Hmm? It is not mentioned here. Why it is not mentioned? Let the people decide. Let the people decide. And you won't believe, but let me tell you the fact about the SEBI guidelines. Let me tell you the practical about this thing. Ruko. Share application form. If you see this, how does the share application forms look like? Wait. Shabash. No, it is here. Fine, it is right. I do not want to waste my time by showing this. But according to the SEBI guidelines, if you look at this, according to the SEBI guidelines, you have to pay check. Check, you understand? You have to give the check along with your share application. It is not like this that first of all you will apply and later on you will pay. Sorry, it will not happen. Today you have to pay your check at the time of your application. At the time of your application. Are you getting me? That is why when this draft prospectus or rough prospectus is issued, company is asking the people that you tell me how much quantity you want to buy at what price. You will decide. This is what is our price band, 200 to 300. And whatever price you decide, suppose here Miss Neha, she's deciding to buy 1 lakh, and according to her calculation, this company is good at 210. So what's the total money she should pay at the time of application? Answer the question. 210 multiplied by 1 lakh. So 2 crores 10 lakhs she needs to pay at the time of application as a check. As a check. So different people will apply for the different shares. Some people are comfortable at 200 only. Some people are comfortable at 210. Some people are comfortable at 25. Some people are comfortable at whole 300. Depends upon the valuation they will apply to the company. But while they file the application form, they have to pay the whole amount of check. Whole amount of check. Now look at this. Now the company has the lot of applications. And now the things is going, if the company keep it 200, look, on the basis of the application received from the people, now company will scrutinize, analyze the applications. That if company put 200, then how much percentages? So 150 percentages would be the issue. If it keep to 210, then it is 130%. If company puts, let's say 250, then company is able to achieve, let's say 110 percentages. If company put it at 180, then let's say 95% people are ready to buy the shares. If company put whole 300, then only and only 65% of people are ready to buy the shares. So on that basis, you tell me at what price the company should, which price should be fixed up by the company? Answer the question. 200, 200, 150%. Look, 200 rupees if you are keeping Monica, then there will be more number of shareholders. But if you keep 280, you can get the same amount with the less number of shareholders. If the number of shareholders are less, the control will not be diluted among the more members of the company. I hope you're able to understand. So the best is 280 rupees. Why 280 is the best price? Look, all those people, if company keep 280, can I say all those people who applied for 300, all those people who are ready to buy the shares at 300 rate, they are automatically ready for 280? Because those people who are ready to pay 300 per share, they're obviously ready to pay 280 per share. Do you agree with me? Hello? Hello? Do you agree with me? All those who are ready to pay 300. If I tell you, no 300, only 280. So obviously your answer will be yes. The person will be stupid to say, no 280, please keep 300. Why? So guys, all these other applications will be rejected and this will be accepted. And now selection will be made between this 95 to 65%. This is called pro rata allotment. Are you getting me? So understand here, all the other checks and the money will be refunded back, and now money will be accepted only from this many people, and whosoever is selected, only those people will be given the share allotments. Remaining one will be refunded with the amount. Refunded with the amount. Refunded with the amount. Now company is very much confident that if company keeps 280, it will definitely get 100% without underwriting. You can type the word yes or no. Hello. Come on. All right. So guys, this process here, who is fixing the price? Public is fixing the price or company is fixing the price? What is your answer? Price of the share is getting fixed by whom? Can I say public? And that is why students, this process is known as book building process. Understand? Now another question. The prospectus which was issued was a final prospectus or it was just the rough or draft prospectus? Answer the question. Prospectus which contains the information about the company except the price and some other details, it was a draft prospectus. So student, this draft prospectus over here is known as red herring prospectus. This draft prospectus is known as here red herring prospectus. Are you getting my point? Hello? Hello? All right. Now understand, red herring prospectus already issued to the people. And now later on there will be final prospectus will be prepared. My question is, will there be major changes or very small changes? Answer the question. Because you understand, look, if you look at this particular prospectus of Tata Steel, can you see this over here? Can you see? So this prospectus again contains how many pages? You can see 423 pages are there. But this is final prospectus or it is red herring prospectus? What do you think about it? Hello? Is it final prospectus? Where it is mentioned? Look at this, my dear students. It is written over here, red herring prospectus. Can you see this? Book building issue. Uh, Students, are you really understanding what I'm trying to say? Hello? Okay, in the year of 2011, obviously, by following the Companies Act 1956. This is the red herring prospectus because the price is not mentioned here. And we let the people to decide about it. And this is how we can avoid the chances of failure. So guys, almost it contains the 423 pages. The final prospectus will be there. It will not contain the major changes. All right. So there will be some small changes. Are you getting me? And these small changes will be, tell me, these small changes will be intimated to the people. Again, you don't need to give the whole prospectus again because the information is almost the same. So do you again need to inform the entire prospectus again, or just mere changes intimation is fine? Come on, come on. Mere changes intimation is fine? Obviously, yes, mere changes would be fine. So the document which contains the changes is known as what? Is known as what? Answer the question. It is known as information. It is known as information memorandum. Are you getting me? So information memorandum will be issued. Information memorandum will be issued here to the people to intimate the changes. Then what are the changes taking place over here? Information memorandum will be issued. You got the point? So this draft prospectus is known as the red herring prospectus. Okay. So indirectly, can I say that final prospectus is equal to red herring prospectus plus changes. Changes in the sense information memorandum, right? This is known as the final prospectus, contains almost all the details of that. Okay, but my question is whether red herring prospectus, is it a prospectus or not? So if you look now, the definition of section 2 subsection 70 here, look at this. Let me go up. Yeah, over here. What is written? Prospectus includes red herring prospectus and shelf prospectus. So what is the interpretation of these two things? That means all the provisions which applies to final prospectus. Can I say it also applies to red herring prospectus? It also applies to shelf prospectus. Come on. Because even if red herring prospectus is not final, but according to section 2 subsection 70, it is considered as the final prospectus. It is considered as the final prospectus. And that is why it also requires to follow all the provisions which are applicable to the final prospectus. And one of them is the contents. Contents means understand the content of the prospectus should be according to section 26. According to section 26. All right. So final prospectus must contains the contents as prescribed in section 26. So red herring, so shelf prospectus. Final prospectus needs to be submitted to ROC as well as SEBI. So my question is whether red herring prospectus needs to be submitted to ROC and SEBI before issue to the people. Answer the question. Does it needed to be submitted and registered with the ROC and SEBI before giving it to the people? What do you think about it? Answer is absolutely yes. So student, that was now just the explanation of one definition called prospectus, section 2 subsection 70. Notes, yes. Okay, just a second, I'm just giving the notes one. Hey guys, are you comfortable with these notes if I'm pasting here, or Should I give it to read from the material? Should I present the notes here? या आप material से पढ़ लोगे? बताओ. I don't mind to paste it over here because by the way, you people are what I can say, yeah. Okay, fine. Here I should no. All right. Quickly, you people just go with this explanation. And yes, these all are the points here. Copy this. And before copying, my request is you read it. If you have any doubt in the point, I'm here. Tell me if you have any doubt in this, I will try to solve it. Please. Read it. Obligations of red herring prospectors. Which point, Monica? Okay, this point, I guess, fourth point, right? So that's what I said. That let's say in the final prospectus, if you are putting wrong, in the final prospectus, if you are putting wrong, you will be punished. You will be punished. Same way, if you're putting something wrong in the red herring prospectus, you cannot defend yourself stating that it is a rough prospectus. If it is draft prospectus or if it is rough prospectus, it does not give you any power to provide wrong things in the prospectus. Got it? It does not give you any power to provide wrong things in the prospectus. So obligations are same as the main prospectus. That's what this point is trying to say. All right. So I think that's all for the day. Thank you very much. Now you can leave. Whose class after this? Sunil sir, I guess. All right. Good luck. All right. Again, I want to get the feedback from you students. Did you really like the today's presentation? Look, I'm a little bit scared of because this is the new technique. I think first time I presented in your batch. I don't know the last time I was taking the handwritten format, right? So if you're not comfortable, you can raise the objection and I can go with that. Okay, please. Thank you. I'm stopping sharing now. Thank you.